we'll likely get to 200,000, but my guess is we'll test 70,000 before we get there. And he looked at me like I was crazy, but that's the nature of Bitcoin. This is still a very early adopting asset. One of the real gatekeepers here is the Clarity Act. I think there's a lot of fence sitters, institutions, commercial banks, and otherwise that are really not going to move on Bitcoin until they get clarity from the U.S. government.
Scaramucci begins by emphasizing an important sequencing error many investors make. They assume favorable regulation must precede institutional adoption. In Bitcoin's case, the opposite occurred. Institutions moved first. Regulation followed. Bitcoin ETFs are now widespread. Custodial infrastructure exists. Institutional capital is present. Yet regulatory clarity, particularly in the United States, remains incomplete. This partial clarity creates a peculiar environment, enough legitimacy for large players to enter, but not enough certainty for the most conservative institutions to fully commit. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
You know, it's interesting to kind of list the fact that we now have a favorable regulatory regime. That's preceded by the fact that, of course, institutionalization has occurred. The ETFs are everywhere. It's almost as if crypto Bitcoin bulls got most of what they wanted, and I don't know what to do with it.
Well, listen, there was a moment of euphoria last fall when Bitcoin got to its all-time high. I turned to one of my partners and said, we'll likely get to 200,000, but my guess is we'll test 70,000 before we get there. And he looked at me like I was crazy, but that's the nature of Bitcoin. This is still a very early adopting asset. I've been on CNBC for the last 5 years talking about Bitcoin, never calling it an inflation hedge, never calling it a dollar substitute or digital gold, but calling it an early adopting technical asset that has money-like characteristics and gold-like characteristics. But if you look at the demographics around Bitcoin, Michael, they're still young demographics. And so when you had debasement fears coming into this year, you saw the rally in gold and silver. That's because the older people have the money and they believe in gold and silver, and they're still not quite there with Bitcoin. And so one of the real gatekeepers here is the Clarity Act. I think there's a lot of fence sitters, institutions, commercial banks, and otherwise that are really not going to move on Bitcoin until they get clarity from the U.S. government. And so I think it's a coin toss now whether or not that gets approved. Some of the Democratic senators I've spoken to say that it will, but I think that's one of the big gating factors here. And this is typical volatility for Bitcoin.
Anthony, why is it, though, typical volatility for Bitcoin when there's been so much change to theoretical change to who holds it, with institutions coming in, with ETFs, with the rise of digital asset treasury companies? Why isn't there more stability? Why does this look like a run-of-the-mill Bitcoin pullback that we've seen over the past, 10, 15 years?
Well, Melissa, I actually think it's been masked somewhat. I actually think the declines, if you look at the 4-year cycles in Bitcoin, the decline could theoretically be deeper. If you just did a map of those 4-year cycles, you were looking at a retest somewhere at the 38,000 level. Now, it did hit yesterday the 200-day moving average, and it seems to have held there. I also like the fact that the fear greed index, which is from 0 to 100, you're at 5 right now, which is like one of the lowest indicators that we've had in the history of Bitcoin. So there's overwhelming fear. But I think we've actually had a softer, believe it or not, Bitcoin correction as a result of strategy, the ETFs, some institutional buying. But remember, this trades on its last trade based on liquidity or illiquidity. And I'll take you guys back to October 10th. Lots of circuit breakers tripped at Binance. There was something like $28 billion liquidated very quickly. And it does look like somebody got blown out or margin called over the last week. I mean, you had a 25% drop in Bitcoin and today a 9 or 10% rise. So, yeah, it's a garden variety correction for Bitcoin. We're still bullish. I frankly bought more Bitcoin yesterday. I intend on buying more Bitcoin next week. But it has been muted. And so this is the thing I always tell people about Bitcoin. If you don't like this level of volatility, this is an early adopter asset. Amazon went down 50% 8 times in its first 15 years of existence. That's sort of what Bitcoin is doing. If you don't like this volatility, you have to stay away from this asset.
Anthony Scaramucci closes with a personal admission. He bought Bitcoin during the recent sell-off and intends to keep buying, not because volatility has vanished, but because it hasn't. Early adoption, he argues, rewards those willing to endure discomfort. Stability comes later, once ownership broadens and conviction deepens. That acceptance of volatility sets the stage for Benjamin Cowen's framework, which strips Bitcoin of narrative and belief, treating it instead as a recurring behavioral pattern defined by time, price, and probability. One where extreme swings are not failures of the asset, but structural features of an early, maturing market.
The general idea that I think makes the most amount of sense to best understand this market is to just simply say that that was the top in October, and that the top occurred when it always occurs, the fourth quarter of the post-halving year. Same thing as always. And that really, after Bitcoin breaks below the 50-week moving average, it then goes to the 100-week moving average, and then to the 200-week moving average. And then you can see that was 2014. If you look at 2018, it goes below the 50, then below the 100, and then to the 200. And then if you look at 2022, same thing, right? Even a little bit worse, below the 50, to the 100, and then to the 200. We actually went a little bit below the 200, but you can see that the general idea played out, right? 50, 100, 200, and so on and so forth every single cycle. And then this cycle, what we've talked about is we broke below the 50. When you break below the 50, that was final confirmation that the bear market was here. Right? That was final confirmation. You didn't need to wait. I know there's some people that are like, oh no, you got to wait until it breaks down, below all these random levels. But like the problem that I have with all that is that if you wait until that time, the bear market's halfway over. And what happens is if it takes you a long time to even recognize that the bear market is here, then you end up selling a lot closer to the bottom than you think. And then it takes you a longer time to get on board with the next bull market. Whereas if you kind of recognize, if you saw the writing on the wall in Q4 of 2025, you've already been on the right side of the market for several months. And your biggest problem you're facing right now is just figuring out, okay, when do you start deploying? But I do believe Bitcoin will find itself at that 200-week moving average, right? I really do. Could there be a rally, right? Everyone wants to know, could there be a rally? At any point in a bear market, you can always have a rally, right? So let's do away with the thinking. You can always have one. And in fact, a lot of times in bear markets, you have the biggest rallies in terms of how quickly they move. They don't always, they don't lead to higher highs, but just how quickly they can just sort of the rip your face off type rallies. But I wanted to go through an exercise with you guys. And the exercise is this. After Bitcoin breaks below, say, the 50-week moving average, how long historically has it taken to get to the 200-week moving average? And then we'll do it with the 100. But let's go for the 50. So first weekly close in 2014 below the 50, it took 22 weeks to get to the 200-week moving average. 22 weeks. Now look at 2018. The first weekly close below the 50-week moving average, it took 29 weeks, right? Now let's go to 2022. First weekly close below it, 26 weeks. Do you see a pattern? So you have 22, 29, 26. Let's just write those out, right? 22, 26, 29. That's how long it took to go from the 50-week to the 200-week. Now let's see where we are now, right? Because that could give us some idea as to, what's really going on. So we closed below the 50. First week was the week of November 10th. That was final confirmation of the bear market. That was final confirmation. The initial ideas that we talked about back in October, the sort of the rationale for why October could in fact be the top, was mostly due down to just cycle timing, right? The ROI from the low, and just seeing that every single cycle peaks around the same time, right? Like they all peak around the same time. If you take this out to the lows, you can see how every single cycle, the top occurred basically within a couple of weeks of each other. And one of the hard parts about this is that a lot of times this sort of analysis is dismissed in favor of more macro guru analysis. And I've had issues with that on Twitter, where I will post sort of macro analysis. I'll post my interpretation of macro indicators, and then people write it off as like not really using the macro. But the problem is that I used the macro to understand that we were not having an alt season for the last 4 to 5 years. Whereas a lot of people use the macro to say we were having an alt season for the last 4 to 5 years. So you can't really dismiss someone as not using the macro just because they're not using the macro to justify an alt season, right? I would even say that if you use the macro for the last 4 years and spent every year calling for an alt season, then you were not really using the macro, right? You're just a permabull on a really risky asset class and pretending like it's a macro thing. But the macro has been completely unfavorable for altcoins for years, right? For years, it has not looked good. So I want people to recognize that, like, just because you go around saying that, like, you know, you're a macro person, because I got tons of people coming after me right now, right? Because I dare question the idea that Bitcoin is not in a super cycle, right? You can put macro on your name all you want, but I mean, if you use the macro to call for alt season for 3 years, I mean, you clearly missed something. You clearly missed something. So why dismiss it? Like, why dismiss it? And so what I think makes sense in this case is to say, well, you know, Bitcoin always tops around this time. And that's why October made some sense. It made some sense. Now, since October, Bitcoin is down 44%. I know we're going to get to this, by the way, and I said we're going to get to the whole 50-week, 200-week. But let's just do it now before I forget, because I know some of you guys are getting antsy. So where are we now? So right now, we're on week 12. So we are way ahead of schedule in terms of how long it normally takes to get down there. We're currently only on week 12. You know, normally it takes twice as long to get to the 200-week after going below the 50-week. So either we get a counter trend rally that lasts a couple of months and makes all the sort of the permabulls lean into it, makes them feel like they're right again and call for the super cycle, only for it to be a macro lower high, and then we get down there sometime a few weeks later. But if you look at it a slightly different way, if you look at it as the 100-week to the 200-week moving average, if you do that, what you'll notice? So go from the 100 to the 200. Closing below the 100 in 2018, it took 4 weeks. Okay? In 2014, first weekly close below it right here. We got back above it, but we didn't know. Like, we have to say first weekly close below. We're not gonna be like pretend like we knew exactly when, right? Just say there from there. So that was 15 weeks. So 15 weeks, 4 weeks, and then this one was 6. So you have 4, 6, 15. We are currently on 2, right? 2. So for this one, we're on 2. And then for the other one, going back all the way over here, we're on 12. Okay? So we are kind of melting down quicker than normal. But what's interesting is if you actually look at the year-to-date ROI of Bitcoin in 2026, and you average out the prior midterm years, I mean, what else is there to say, right? I mean, like, it's doing the same thing it always does. And, you know, everyone's out here spinning their wheels trying to figure out how to make it a super cycle. But what what if it's just doing what it always does, right? And actually in 2026, if you compare it to 2014, it looks kind of similar, right? Like it pops up early on, and then it just gets a drastic sell-off before getting that counter trend rally back up. What if this low here, what if that is the 200-week moving average? And then it bounces off that and then goes lower. Yeah, I mean, it could. I'm not saying it has to bottom at the 200-week moving average. I mean, hell, last cycle it went below the 200-week moving average. Right? It went to like below the 300-week moving average. So I think it makes sense to, I'm not saying completely dismiss the bull case. I'm just saying, like, why dismiss the bear case? That's what I'd like to say. Like, to everyone out there, to all the permabulls that keep, calling me out because, they're upset about this, why dismiss it?
Cowen directly addresses the idea of a Bitcoin supercycle, a permanently altered market structure that eliminates deep bear markets. While he does not say such an outcome is impossible, he argues that dismissing the bear case outright is intellectually irresponsible.